This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on July 22nd, 2011, approximately 8:39 in the morning Mountain, 10:39 Eastern. As I always say, our radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3, AM 640 in Toronto, 8 o'clock in the morning on Saturday morning. If you ever miss a radio show, you can catch us. We're archived on Harold's website, HESradio.com, HESradio.com. Another crazy week in the financial markets. Late yesterday, the EU came out with another bailout rescue of Greece and the other countries that are in trouble over there. It's almost a soft default for Greece. So we've got yet another rescue plan. The United States, the politicians in the United States continue to fight over the debt ceiling. Obviously, some people say August 2nd is the deadline. Others say it's not. They're still fighting over the debt ceiling and the budget. $1,600 gold, $40 silver. Harold, it was a fantastic week once again to be in hard assets. I put my money on gold and silver and diamonds over politicians any day of the week, I'm afraid.
I'm with you on that, Randy. I got to tell you, these are the most dangerous times that we've ever seen. And again, it's not a time to be speculating. It's not a time to be taking unnecessary risks. It's a time to have a game plan to make sure that we're on the same page, basically, because again, for most of us, we've never seen these type of market situations before with countries going bankrupt and currencies going under and that type of thing. So again, the most important thing is to be very, very cautious and to make certain that you're doing the right thing financially. Basically, the show has been on for a decade now. We saw this situation occurring 10 years ago and brought this to the attention of our Canadian listeners. And basically, gold has gone from $250 to $1,607.90 that it hit so far today, which is a record price for gold. Silver has gone from $4 all the way up to $50. We saw a pullback to $32.70, and now we're back up to $40. In fact, as we're taping the show today, gold is up $15.90 already in the morning, and it's just early, and silver is up 82 cents, and we've broken through that $40 level again. Platinum's trading at pretty close to $1,800. In fact, it hit $1,833 this morning, and palladium broke back above $800 and is now trading at $815. So again, the precious metals markets are certainly letting us know that there's tremendous danger out there. Don't forget, back in the 90s, when the stock markets were strong and the economy was strong and the U.S. dollar was strong, gold was at $250. Nobody even wanted it. But gold is a barometer. It tells you when there's difficulties happening in the world financially. And again, when gold is sitting at record prices and going higher almost on a daily basis, it's telling you that we've got severe problems that are not anywhere close to going away. So basically, I still believe that we are going to see, and we predicted at the beginning of the year, when gold was at $1,350, we predicted it would end the year at $1,850. We're now sitting halfway through the year at $1,600. I'm very comfortable with that price. However, there is no doubt in my mind that we're going to see another year-end rally, just like we saw last year, that will bring prices of gold and silver substantially higher. In fact, as the U.S. dollar will continue to fall, and the U.S. dollar is falling even though the euro is plummeting because of what's happening with the sovereign debt situation in Europe. So the fact is that if we're right and the U.S. dollar does drop to 71.50, it's at 74 and change right now, but if it drops to 71.50 by the end of the year, that puts gold at 18.50, which is the number that we predicted in January, and it would put silver back up above $50. Now, we did predict $50 silver this year. We've already hit that, but there are buy orders in the futures market above the $50 level that I think we're going to see a run in the latter part of this year that could bring silver up to $60 to $65. Don't forget, we saw that last year. Silver in July, at the end of July, was sitting at $17, and by the end of the year was trading at $30. So we saw a $13 move, over 40% in just 90 days. A lot of that came, in my opinion, from short covering. As we know, and as you know by listening to the radio show every week, we do make reference to the fact that there are certain banks that are allowed to take heavy short positions in the market. It means that they want the market to go down in order to profit. And that has been a problem over the years. In fact, in the 10 years that we've been in the gold and silver market, we've seen 9 major corrections due to these banks. And the fact is that as they're shorting the market, they're expecting that the market's going to go down so they can profit. but the fundamentals for the gold and silver market are extremely strong. And again, right now we're sitting at record prices. What I think is going to happen is that these shorts are going to have to cover their shorts before the end of the year. It means they're going to have to buy them back. And it's very simple. Even though the futures market sounds a little bit, intimidating, which it is, and a little bit confusing, the fact is that when you buy, the prices are going to go higher, and when you sell, the prices are going to go lower. And I do believe, just like last year when we saw a $13 move in 90 days in silver, that we're going to get a reoccurrence of that should bring silver prices not only back up to 50, which is only $10 from the all-time highs, but on top of that, there's buy orders above that could bring the price of silver by the end of the year to the $60 to $65 level, which again is extremely exciting. On one hand, we talk about how the world is collapsing financially. On the other hand, this is a very enthusiastic radio show. And the reason that we're enthusiastic is because we made the right moves. Our clients and our listeners to our radio show are in gold, silver, and diamonds. And the fact is that as inflation picks up all around the world, and we know that's happening, oil's, by the way, is all the way back up to almost $100 now. And again, we think it could hit 120 by the end of the year. As inflation continues to go higher, and what you want to do is you want to own gold, silver, and diamonds. It's proven. Gold, silver, and diamonds do the best during times of high inflation. So again, we've known that inflation was coming. We saw that these type of situations were going to occur, and our listeners and clients are in gold and silver and diamonds. So the fact is that as the stock markets get into more trouble, and I believe that in 2012 and 2013, we are going to see stock market moves on the downside that defy description. The last place that I would want to have my money right now is sitting in paper assets, mostly in stocks. And the reason for that is just look what's happening in the United States. The government is going under. They can't pay their debts. In fact, there's never been a time in history when a country has been in debt as much as the United States has that they haven't defaulted and gone bankrupt. And what that's going to do is leave $14.6 trillion worth of losses around the world if that does occur, and some brilliant minds do believe that that's going to happen. So again, the fact is that we aren't down because most of us are in the right markets. And when you make the right move, you deserve to make the money, and that's what our clients are doing. In fact, the next 5 years will be the biggest money-making years I think that we've ever seen. For those that are us that are situated in hard assets, gold, silver, and diamonds, I believe the next 5 years will be the years that we are going to make phenomenal amounts of money depending on what you have in. Percentage-wise, I think we're all going to do tremendously well. All we do is invest the money that we can afford to put into the market. You never put everything that you have into any one given investment. You've got to diversify a little bit. But basically, you should have 20-25% of your money sitting in physical gold and silver, and you should definitely own some diamonds. And we're going to talk about that later in the show. But the fact is that the markets are telling us why we need to be in the market. And gold is sitting at $1607.90, and silver sitting at $40, and the outlook for the rest of the year is tremendously strong. So again, if you believe that inflation is coming, it's going to eat away at your money. And the fact is that if you're hedged, if you're in gold, silver, and diamonds, you're going to actually make money on inflation, where most people are going to get hurt by it tremendously because your buying power reduces substantially. Also, currencies will plummet as countries in debt will actually start printing money again, and that's what we believe is going to happen. I don't think the U.S. can borrow that much more money, and soon they're going to have to start printing again, and when you print money, it weakens your currency, and that's another reason why you want to be in precious metals and diamonds, because weak currencies cause precious metals to go substantially higher. There's huge danger. Again, if the U.S. enters into default, which a lot of brilliant minds think they will, it could be a Lehman type of disaster. And if you remember in 2008 when the stock market dropped from 14,000 down to 6,500, almost everybody got wiped out. It was primarily because Lehman went under. And what happened is that there was a run on the financial markets. In fact, people were so petrified with what was happening in the economy that they were lined up at banks trying to take their money out of the banks and bury it in their backyard type of thing. Now, the FDIC, which is the insurance company that backs bank accounts in the United States, raised the limit from $100,000 insurance on a bank account to $250,000, and that seemed to calm things down. Otherwise, there would have been $4 trillion taken out of the money market funds, and that could have bankrupted the entire financial system. In fact, that's how close we came to financial Armageddon. Well, we're there again. And the fact is that we're very close to this whole thing happening again, but on a much, much larger scale. Because all they're doing when they're bailing out countries like Greece and Italy and Spain and Portugal and Ireland, they're only delaying the inevitable because nothing is changing. They've done absolutely nothing to change what the actual problem is. So, again, all I can say is that the financial markets are in tremendous disarray. They're very confusing, but let's just keep it simple. The fact is we're going to have extremely high inflation, plummeting currencies, and countries that are going to go under. You want to be in gold, silver, and diamonds. That's the area that you're going to not only protect your money, but you're also going to make a ton of money. Just to show you one other situation that's occurring in the United States right now that is so concerning is that the legal system is collapsing. Do you realize in California, and it's in the newsletter, they're talking about San Francisco, that they've let go so many people in the legal system, in the courts and everything, that first of all, it takes an entire day or two to line up to pay a traffic ticket. Do you realize it could take 18 months to finalize a divorce, and literally it's going to take 5 years for a lawsuit to go to trial? That's happening not only in California, but in other states around the country. Most of these countries are bankrupt, and the government is bankrupt, meaning that they're trying to improve employment, which is one of the biggest problems in this country. But the fact is they're going to have to let go so many government employees that it's going to hurt the entire financial system. I'm not trying to scare anybody. I'm just trying to, and Randy and I are just trying to bring you the information you need to make an intelligent business decision. We're small investors. We're not the Warren Buffetts of the world, and we're not the big hedge funds. The reason that Randy and I show up every single week and do this radio show for a decade and never missed a show is because our clients need this information and our listeners. I get phone calls every single day from people that listen to our radio show that tell us that how our show has affected their lives, and almost every time it's been an amazing, positive conversation that makes my chest swell, and I share that with Randy. So again, thank you for all the listeners out there that have taken our advice, that are in the markets, that are feeling good about what's happening in the markets because they've hedged and protected themselves. And again, I take my hat off to all of you because it takes guts to do what you did.
The telephone number to invest in precious metals. Now is the time to have an allocation of precious metals in your portfolio. The company that Harold recommends you use is Worldwide Precious Metals. They're out of Vancouver, a Canadian company, and that's who you want to deal with. A Canadian company in Canada. They're based out of Vancouver, been in business 10 years, the entire time this bull market in hard assets has been on. They've been through all the ups and downs in the market. They're very experienced. This is the only thing that they do. They specialize in precious metals. They're the experts. That's who you want to deal with. 1-866-623-2002 is the telephone number. 1-866-623-2002. Their website is wwpmc.com. Go there, take a look around. They have testimonial letters, lots of good information there. wwpmc.com. 1-866-623-2002. There's something that Harold touched on that is very, very important, and we have a quote from Ron Paul in our newsletter. If you'd like to receive our newsletter free of charge every week via email, you can receive it by connecting with Worldwide, by calling their number, or via the website. They'll send it out to you. Ron Paul said this week, and it dovetails with what Harold said, when a country is indebted to the degree that we're indebted, he's talking about the United States, the country always defaults. We will default because the debt is unsustainable. If we don't understand this default will not be because we don't send out the checks. We will send out the checks. It will be a default on basically because people will get their money back, or they will get their Social Security checks and it won't buy anything. And what he means by that is we're in a situation where we have serious inflation. Bill Buckler came out this week and said there is no basis for confidence in any sovereign debt paper because there is nothing behind any of it except the promises to pay for future governments. And he says, how can they pay if they go on spending more than they take in? And if they do pay, what will the stuff they pay for be good for? And that is the question. If you're sent out fiat currencies and we have serious inflation, exactly what will it buy? That's what the point Harold was trying to make. Have an allocation of hard assets, gold, silver, diamonds. because that will protect your purchasing power. A lot of people are very concerned about purchasing power as we go forward,